Welcome to TradeTheMBI.com. This is John. This report is for the 31st of August, and well, technical glitches preventing me from getting onto my dedicated server. It's always these Windows update situations. It created all sorts of havoc. It took quite a while to get squared away, but we're back, and it was a poignant move. I mean, this is something that we've been talking about. We've been within this rising setup here. Both shakeout, DOC, everything's been moving along, but every time we get towards the peaks, we end up with this little bit of a mean reversion that takes you right back to the ABM yellow. What we noticed the other day was after we got the buy signal, we were still having shorts rising, which is actually beneficial for making newer highs. The problem was that we saw the crossover here of the orange and steel. And so, just like we talk about the opening of the mouth, from before, when it is in a bullish construct like this one was when it first started out, and then boom, continued. Once it starts to close, you get that cumulative effect as well. In this particular case, it was right at the level that we were just about to start getting right above the zero level. In fact, it just moved there now. Should provide some additional support for it, but this was just soft pullback right to the ABM yellow, which can't quite see it because price is covering that one, so I'll just go ahead and click it on there so you can see it. It's called the DO Fast. 2891 is the number, and then you have the white at 75, 73, and then obviously the ABM green at 64 is sort of that failsafe, but that happens to coincide with the Fibonacci, or Morganacci as we like to call it, 76% at 2864. So those match within a tick, which becomes relevant because that really becomes a point at which you'd want to see the DOC readings turn around intraday, at least if you ever got down to that kind of a retrace. And so we're hovering right around this, and we talked about this before. You'd get the breakout that would go up above that 29, and then it pulls back to it, and that was the point of seeing this positive extreme. So we would expect the potential of that 2876 range, so 2880-ish, which would not be a big deal, not at all. And from the NQ standpoint, likewise, looking almost identical. The same situation, a little bit better as far as rising red as well as midterm buyers in green. So much stronger from a reading standpoint. We turn to the euro. Of course, those are just a tiny bit of softening. It's above this blue line, which is the top side of the range. Anytime it's above there, you can expect the S&P is going to respond favorably because it just adds to earnings, and that's not something that's a fixed thing. That the longer it stays above that line, the more improved the earnings are. Quick move above and then back below doesn't help. It needs to sustain itself like it has all this period of time. That's improved exchange rate earning prospect, and that is real. Those are real returns. The softness in bonds, we expected to get down to this 120.45 range before. It should actually even dive further than that. We're not seeing a reset yet here, so any little pop you see here before orange dips below, red in that a little premature. You got midterm, short-term buyers like doing what they can, and that helps. But if you don't get the full reset, it's not sustainable, and it shouldn't be. But shoulda, coulda, woulda is what the market is made of. You just have to go with what is. And in this particular case, now we're seeing the inflationary aspect pumping up here within the oil construct, and this is something we talked about. This has been the more favored trade over gold, particularly if you start to see more non-U.S. denominational trades in it, because it provides flexibility, and that's, I think, led to some of the gold suffering. Bitcoin has been like right in between. It's been hovering at the same level. Dips as low as 6,000, back up to 7. 74 has been like the top side range for a while, but again, that's inherent in the nature of it, and it's going to have to transition to a more liquid currency in order for it to be one of those things that can explode, because it still can. It's just there's a lot of alternatives right now. You can shrink this a little bit. See, no, it's still loading data. it was an interesting setup because we ended up with quite a few gold below the 50%, and when that first happened, I don't know if I can slide it just a fraction to see where it came in, because it came in right around the 23%. I was looking for the 50 to where it would produce another short setup, and I knew at that point that we would start to see then bigger decline. There we go, up too far. I had to reset everything, so it was kind of a pain to redo it all, but all right, now I've got the chart under control here. I have to wait for it to load all that back. But see, we got back up to the 50%, and we started to get the rise here, DOC-wise, and that's that crossover I looked for right here. The opening of the mouth at the same time. You have crossover of green below red. It all coincides. Finally traded across for, but that's when it broke to the new lows. We had the reset. Now this is a little bit more of an unusual. It was the dip below the 20 line, which is why I have that one there, because it tends to produce those little bounce back moves. And while it produced the move, we didn't get the dip of the orange below the red for sustainable setup, nor did you have a reset of steel below on a dip down. So as this was rising, it was a little bit late to it, because it's just one of those ones where I wouldn't be all that interested in from a long standpoint until it got to the 50% range. And then it made gold right up at the 100. So with the gold up at the 100, there's not a whole lot of range to go from there, and then it's just a matter of looking for, your first potential weaknesses, and that took place right up there. We were already in what would be considered a sell signal from it, but the spike sort of made the clear move of it, but it had happened as early as right back there when it first started to open up the mouth, and you can see it just continued to open, and then you get your slow closing. At this particular point, though, you didn't have one of those crosses where the steel was below red coming across, so those tend to sustain more. What you would be looking for is if the steel dips below and then crosses back, it sort of effectively cuts off the short as well, because what it's a reset of short-term buyers, which did not happen. Which is why we're in a continuation weakness point, because it still hasn't happened. So it becomes poignant. I told you this change would take place. What was the white candle that indicated retrace back to those levels before it produces the little bullish blue, which usually don't last too long. And in this case, again, perfect to the 50, and then fell back down, and that was the rejection. Pretty much took place right there as the cyan crosses above green. Once that green gets above, if you can continue to get your red moving into a new zone, fine, that tends to give it enough oomph. When that doesn't happen, usually you make the new low. In this particular case, that's exactly what happened. But now here we did get no dip below the red line, lower low, higher extreme, and then your orange dip below took place right there. Of course, gold came in below the 23% in this case, and of course it made right back to the low. So it did what it was supposed to do at that particular point, and it's pretty much floated flat since there every time it's gotten anywhere of significance, because you don't have a reset. Right here we ended up with another little reset, but you already have a dip below the red line, which caused it to come right back down to those lows. So all in all, perfect. Glad to be back in contact with everything, and probably be sending out the indicators during market hours since we have the weekend. That'll make it easier to be able to get them all up, but then you'll have these updates that coincide with all of the adjustments that I made behind the scenes. So really you won't notice much except for obviously this change in color, which used to be the white, so that when I actually have the white show up, and you'll know that that's a true NBI buy signal, and that'll make it easier. So all in all, good stuff. As always, trade well. We'll talk again later.